Why can't you day trade on Robinhood? Did you know that fewer than 1% of day traders actually make a profit? Or that Robinhood, despite its reputation for accessible investing, has strict limitations on day trading? These seemingly contradictory facts highlight the complexities and challenges of this high-risk, high-reward strategy. At the heart of Robinhood's restrictions on day trading is a regulatory requirement known as the Pattern Day Trading (PDT) rule. This rule, enforced by the Securities and Exchange Commission (SEC), stipulates that investors with less than $25,000 in their brokerage accounts can only execute 3-day trades within a 5-day period. A day trade is defined as the buying and selling of a security on the same day. The rationale behind the PDT rule is to protect individual investors from the risks associated with frequent, short-term trading. Day trading can be highly speculative and volatile, and it requires a deep understanding of market dynamics, risk management, and psychological discipline. For many investors, especially those with limited experience or capital, the PDT rule serves as a safeguard against impulsive decisions that could lead to significant financial losses. While the PDT rule may seem arbitrary to some, it is a necessary measure to prevent market manipulation and ensure fair play. Without such regulations, it would be easier for unscrupulous individuals to engage in pump-and-dump schemes or other fraudulent activities that could destabilize the market. However, the PDT rule also has its critics. Some argue that it unfairly restricts the ability of individual investors to participate in the market and potentially profit from short-term trading opportunities. They contend that the $25,000 requirement is too high for many people, especially those who are just starting out in investing. Despite these criticisms, Robinhood has no choice but to comply with the PDT rule. As a regulated brokerage firm, it is subject to the same rules and regulations as other financial institutions. In fact, Robinhood has taken steps to educate its users about the PDT rule and to provide them with tools and resources to help them avoid violating it. In addition to the PDT rule, Robinhood also imposes other restrictions on day trading. For example, the brokerage firm may limit the amount of leverage that investors can use to trade on margin. This is to prevent excessive risk-taking and to protect investors from potential losses. While Robinhood's restrictions on day trading may be frustrating for some investors, they are ultimately intended to protect them from harm. By adhering to the PDT rule and other regulatory requirements, Robinhood is helping to ensure a fair and orderly market.